Hello and welcome to the Investing Master Series. My name is James Boyd. My good friend Kevin Horner is in the chat. We welcome all of you here today. We have GH with us, a little fun there with Grace. Hello, Grace, Jackson, Fayez, Jose, Gary, and many others. Welcome and good morning to all. Just real quick, this is a weekly webcast that we do. I'm going to show you some resources that you're going to want to make sure that you save to your browser. And just quick reminder that this class is done each week, okay? This is one of many topics that we actually teach. And you could follow Kevin Horner and myself on X. There's my handle. Kevin, make sure you actually put your handle there in the chat. Now, we call this Investing Master Series because what we'll talk about is stocks, technical analysis, fundamentals, options, etc. It's really meant to kind of be more of an intermediate to advanced class. Now, if you feel like you're a beginner, that doesn't mean you can't learn something. Just you would want to watch it a couple times really to let it sink in. Now, just real quick, and by the way, as we teach this class, we always have a paper money account where we practice together in the paper money account examples to really solidify and learn and to really also find out what we're not completely clear on yet. Now, remember with what we discussed, we're going to talk about stocks for sure, but when we bring up options, remember options carry a high level of risk and are not suitable for all investors. Remember that also the information provided here is for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. And also remember our examples will be done in the paper money software application for educational purposes only. Investing involves risk. And when we talk about examples, they are just that. And also remember that short options can be assigned up at any time up to expiration, regardless of the in-the-money amount. Now, the biggest actually thing that we really want to talk about here today is we'll talk about market conditions. When we say market conditions, we'll talk about some futures pricing that we actually see on some of the major kind of things of interest here that are kind of showing trends. We'll talk about the indexes and the sectors. I might also include industry groups. And then what we're going to do is we're going to talk about the energy space again. We're going to go back to the trades that we did last week, a stock trade and an option trade. And I want to kind of review that. But the focus here today is going to be looking at some lower price oil stocks. Okay. And when you say lower price oil stocks, how low are we talking about? $20, $30, $40, somewhere in that range. And I want to kind of look at those and see, are there some potential examples that we could practice together in the paper money account? And with that, we'll talk about some other areas that we're seeing strength in as well. Quick reminder as we get going, if you go to this page, so if you go to youtube.com, you're going to see that you could type in the search field, Trader Talks Schwab Coaching Webcast. So if I just type that in and say copy and paste right here, you can just search for that and it's going to come to this page. So if you say, where do I actually see the content? And where do I see a calendar of what you actually teach? Well, just go to YouTube, which I know you're on, okay? Pretty much anyone uses YouTube. And you're now going to see that when you go to this page, right in the middle, it'll say you could follow us, subscribe, and click on that. Subscribing is free, okay? Free, round number 0. And what you're now going to notice is right in the dead middle of the page, it's going to say post. Now, this is very important I show you this because if you say, well, I'd like to learn different topics, if we click on post right there, you're now going to see that if I go to post, it's going to show us a calendar of what we teach throughout the week, okay? So quick reminder, how do we get there? Well, go to YouTube, type in Trader Talk Schwab Coaching Webcast, search for it, right in the middle of the page, subscribe, and right below that, post. And you're going to see that there's a calendar, just a quick, nice way to reference what we talk about. And so if some of you said, well, I'm a beginner, we have a class for stock investing for beginners. What if I have a smaller account? We have a class called Trading a Smaller Account. What if I want to learn about technical indicators and so on, right there. Wonder if you like income strategies like covered calls and short puts. We have a class on that. Wonder if you like to actually use ETFs. Connie actually taught the class yesterday, and Kevin and I teach the class on Friday on the ETFs. And so those two classes in ETFs are not recorded. The rest of them are. Okay, so join us. This is not a one-off, okay? And a lot of times people say, I didn't know this existed. That's why we're holding these classes to make sure that you know that they're available as a Schwab client. Now, also what I want to do is, last thing before we actually look at some charts, I want to make mention that if you go to this link that I sent you, it's a playlist, okay? So this is going to show previous classes that we've actually done, and they're free to watch, okay? So make sure you bookmark that as well. Let's take a look at some charts, and what I want to do is I want to kind of ask you just some questions as we're getting started, okay? Now, first off, some of you might say, well, what is on the chart? I'll share that with you. And let me just kind of zoom in on this. These lines on the chart, they're a whole moving average. It's a weighted moving average, and one of them is a 10, and one of them is a 20 period moving average, okay? So just a little bit different in terms of what type of moving average it is. But I shared with you in the chat a link that you could pull up on your side by simply going to the top right, go to Setup, Open Shared Item, and then copy and paste in what I sent, okay? So I just want to make sure we're all on the same page. So we're 5 minutes in. I shared with you some of the resources, and if I said, well, if I go to Setup, Open Shared Item, copy and paste, what do I do next? Just go to Preview, okay, and import. And what that's going to do on your side is it's going to bring up a little chart that looks just like this. And you could save that right to your platform, okay? So we're on the same page. Now, don't worry, we'll show some other charts and I'll share those with you as well. I'm a sharing person, okay? Now, what I want to do is if I were to ask you a question, what charts, if I said to you in terms of futures pricing or indexes or sectors, what is standing out to you in the market today? Now, as I kind of take a look at some things, one of the charts that kind of stood out today, we've been watching crude oil a little bit. Okay, we know we've had some geopolitical events. This is not the first time, okay? Crude oil actually still kind of holding above the 70 threshold. This influences the energy sector, among other things. So this is really the main purpose of what we're going to talk about here today, energy stocks. We saw it actually come down yesterday, pushing back up again today. Crude oil still above 70. One of the other things that kind of stood out here today that was maybe a little different, after a little pullback, you're going to see that silver, or some people call high-ho silver, did hit the 37 price level. Now, some people like to look at silver stocks or something that tries to track silver prices and so on. That is showing a brand new trend or a confirmation of trend by making a higher high. Now, also, if we kind of said what else is kind of standing out a little bit, we did also see that this movement in commodities, we also saw natural gas actually get a push, okay? So this concept of looking at, let's say, commodities as the US dollar is actually down or has been down, commodities have really been more of a hotter topic. This is looking at the US dollar, the basket, okay, of currencies, and you'll see the US dollar. This chart is showing the US dollar going down. Usually, typically, when the US dollar is going down, the commodities might be trying to go higher. Last chart we'll just pull up in terms of pricing. If you look at gold, now, if you kind of said, what does a regret pattern look like? You might say, James, this is what a regret pattern looks like. I could have gotten in at 1,800. I could have gotten in when it was too high at 2,400 and so on and so on. And what you're going to see is we're getting very close. This is a weekly chart of gold, okay? And you're going to see that if we zoom in on the right-hand side, getting very close. We're seeing the moving averages start to pinch again. Could there be a moving average crossover? Now, we talked about that malarkey yesterday of new highs. New highs are scary. New highs are showing that bulls are winning the battle and pushing up the price. So those are some of the things we want to say. Probably the difference we see today is that natural gas, which, by the way, what sector is natural gas in? We know it's not in financials. Oh, that's right, it's energy. So we need to kind of look at some of these pricing to kind of tell us what sectors might the investor look at. Now, just briefly, when I pull up, now let's kind of look at some charts. When we take a look at the SPX, and let me kind of take this back to a daily chart, you're going to see if we kind of look at this, and I apologize for my lines, but we've talked about these lines over time, it's kind of hanging out. Not necessarily breaking out a brand new high, but holding in there. If we said what's one thing that we don't like about the S&P 500, it's that we're below the moving averages. If For below the moving averages, the momentum on the S&P 500 is cooling off a little bit, okay? Now, does that mean it's in a downtrend? No, but right now we'd probably say it's neutral in the shorter term at best. When we say shorter term, we're talking about in the last 2-3 days to 2-3 weeks. If you go back 2-3 weeks, it's slightly up to some degree, okay, but kind of cooling off in the last couple days. Would you agree with that? Now, last thing we'll do before we look at sectors, you look at the NASDAQ, okay? And if you look at the NASDAQ, you're going to see, and I'll kind of move this back, a big run to the upside, and you're going to see that it's still hanging out near that prior high, okay? Now, if you ask many investors, how many of us thought we were going to be up near the prior highs? Not many, okay? Not many. Here we are. We're still knocking on the door of resistance again. Now, remember, one of the charts, and Kevin, he talks about the semiconductors. Let's talk about sectors now. Let's talk about industry groups, and these will be some of our examples. When you look at the stocks, the semiconductors, give me some stocks that you have been looking at in the semiconductor space. Well, I mean, usually if the market's going up, we tend to really see semiconductors doing quite well. We cannot say that the market has not been influenced or helped by the semiconductors going to the upside. And we know that, as we'll see in just a moment, some of these NVIDIA stocks, okay, Micron, etc. I mean, look at the explosion in Micron, okay? A big move from 95 to 122, and we have people saying, hypothetically, that there's no opportunities out there. Yeah, that's probably not true, okay? And then, don't worry, there's more than that one, okay? Now, so when we kind of take a look at sectors, I'm going to go on the left-hand side, and I'm going to kind of I put in here the SOX. Now, the SOX is technically, we're talking about an industry group, but I put in the sector basket. That's a big enough area where we're going to include it. You're going to see that also, if we looked at that second area, which we said we're going to talk about, is energy. And we talked about the crude oil breaking out, and it broke out further with what happened last week. But what you're now going to notice is we talked about the phenomena sometimes when you get upward trending moves and you see this like 2 days down and then it goes up, up, up. And what color candles are your favorite color candles? And the answer for bullish investors, they might say, James, give me a green one. I've been a good boy or girl. I know how you feel. Now, if we take a look at this, what you're now going to see is we went down for 1 day. We just talked about this yesterday, didn't we? Okay. We talked about if we see that we actually go down for 1 day as represented in a red candle, only to see the very next day go up again, represented by a green candle, shallow pullback in terms of actually percentage, short in duration, only went down for 1 day, and then bulls bought the dip. Now, we're going to look at this sector. Now, I want to kind of make reference to something, okay? Captain Obvious number one is, does the investor have to buy an individual stock? Do they? Could they just buy the basket? Could they? Connie talked about that, right? Kevin and I talked about that on Friday. So if someone says, well, James, I don't really buy individual stocks, I kind of maybe like to buy a collection of them. Okay, well, go to those classes on Monday afternoon, Friday morning, and you can learn more about that. But if you said, well, James, this class is more of a stock and option class, we're talking about individual stocks. We're now going to go down the route, and I want to kind of bring up the example that we did. So I want to bring up just real quick the paper money account. And one of the examples that we've been talking about, I don't know, for the last week or two or so, we talked about Chevron. Now, when you look at, let's say, the energy patch, if you said, James, I'll be honest, I know energy stocks, I pump gas for my car, etc., but I don't really know like what's in the energy space. A quick win would be if you went to the Market Watch tab, you are looking at the Thinkorswim desktop version, okay, which you can customize. Yours might not look exactly like mine per se. I have some headings that are different and so on, but the application is the same. what you're now going to notice is I'm going to go to Market Watch and I'm going to go to Visualize. If I go to Market Watch and Visualize, what do we want to see out of this? Well, it's going to really show us the stocks that are in the energy space. Now, when I go to Market Watch, that tab, and I go to quotes, you're now going to see on the left-hand side, here's the indexes. Okay, fine. Now, if I click on the S&P 500, it just shows what we call a heat map. In other words, where do we actually see some positive momentum, green boxes, or red and so on being down days or down currently in terms of percentage-wise. Now, what you're now going to notice is if we said, well, where is energy on here? Energy is over here. Now, if I said, can we click on that little caret right there to the left of the S&P 500? Now, remember, this is the main thing, okay? You cannot trade what you cannot. I don't even have a watch list. This could become, for some investors, an immediate watch list. These are stocks that actually have met the requirements to be on the S&P 500, okay? Which also tells us something about liquidity, okay, currently. Now, if I click on the energy sector, and these listings are just the sectors, click on energy. And now all of a sudden it blows up, okay, the stocks that are in the sector. So we cannot say, well, I just don't really know which stocks are in there because we can find them that quickly, okay? Now, why are there different size boxes? The different size boxes really represents the different market cap. Market cap is just the stock price times the number of shares outstanding and gives us an overall market cap, okay? So if we take a look at this, we're going to see that the market cap of ExxonMobil is 492,000 million. 1,000 million is a billion. So this company is really worth $492 billion, or in other words, close to $500 billion, okay? Now, if we look at, let's say, Chevron, what you're now going to notice is our example. Now, by the way, in the paper money account, we have both examples. Exxon, we have Chevron. We also included one last week of ConocoPhillips. Let's talk about Chevron for just a moment, and let's just kind of take a look at, is it going the right direction? Maybe consider adding to the position. Let's take a quick peek. Now, what's the position? Well, the position is just shares of stock. Chevron, plus 28 shares of stock. There's the trade price. The mark is where the stock is now, and the stock is up $3 today. Over to the right-hand side, if I just click on that profit loss open, it's going to bring up a little pop-up window box, and it tells us when did we get into the trade. Now, I'm going to tell you, you could actually learn different things about the market, and that's all nice and great. But until the trades are put in a paper money account and practice, it's just learning, okay? So paper money, very important. You practice what you're learning. That way you kind of find out, do you understand it? Would you ever consider doing that in a real account, and so on and so on. Now, so this trade was really done last week. And what I want to do is let's kind of pull up this chart and kind of say, what do we have so far? And might the investor maybe consider adding to the position? So if we went to last week and said, well, what did it look like last week? Well, last week it was right there. It was a shorter term high, okay, on the price graph, short term. And what you're going to see is that candle that I'm pointing to, that was the entry, okay? If we go forward here to the right, to the right, to the right, to the right, there is where we are now. Now, what's the significance? Well, we're kind of coming up to like a near an area of resistance. And sometimes, which you'll see a lot on these energy stocks here today, they're breaking inside old channels. Now, if you watch any classes I teach, we talk about channels all the time. And if you break inside an old channel, you could have two things happening. New bullish investors getting in. Second, you could actually have current investors who own those shares. They could be buying more. And third is if we do have bearish traders out there who are short the stock, well, they could be covering their position by buying the shares back and then kind of pushing it up even more, potentially. So three things happening. Now, what I'm going to do is, how many of you kind of would say, James, I would like more of an income-based strategy? I think if you ask most people, they'd probably say, look, I need income in general, okay? Now, if we kind of said, well, what could be an income type strategy? One of them, two of them, etc. The examples that we tend to look at is more of a cash secured put, selling a put, which is the obligation to buy the shares at the strike price from the time you place it until expiration. Second might be a short put vertical. Now, what I'm going to do in this case is just kind of for simplicity, I'm going to go into the paper money account. We're going to go to the trade tab. So if we wanted to do a trade, so trade number one we're going to do here, going to go to the trade tab, click on the trade tab, and now what you're going to see is the stock information up at the top, right? So not too bad. If I want to do a trade, click on the trade tab. I'm going to type in, make sure we got the right symbol, CVX. And if I click on CVX, there it is, stock information up top, the option chain down below that. Now, what I'm going to do is I'm going to go to the 18 July 25, so that's 2025, 31 days to expiration, and these contracts represent 100 shares of stock. Now, if the investor said, you know what, James, I want to sell the put, calls on the left, puts on the right. Now, if I click on the bid price, what you're now going to see is we got the bid price of 240. And how many of you have ever said to yourself, I would like to buy the stock at a little bit lower price? And then you sit there and wait, and you might not get it. This is the same idea, but as we're waiting, we're trying to capture some of the premium, okay? That $237 is all extrinsic value, okay? Now, what I'm going to do is if we were just sell this, click on that 145 or click right on the bid price right there. You're now going to see if I click on the bid price, it says that we're selling one contract. If yours says minus 10, you can change it to minus 1. Why is it minus 1? Well, because we're selling the option. We're going to actually sell the 145 put, and it has a price or a mid price, which is in between the bid and ask. We're going to push it to 240 or try to. Now, here's the deal. Just because I move it up to 240 doesn't mean it's going to fill. We got to get a fill. We're going to go to where it says confirm and send. And when it says limit order, we're saying we want 240 or lower, or we want 240 and or higher. The answer is the latter. We want a minimum 240. We're not willing to sell it unless it actually is 240 or higher. Okay? Confirm and send. Now we actually get the box here. We could see what the break even is, strike minus the premium. And you're going to notice the max loss, max profit listed there. The max loss is assuming the stock goes all the way to zero. So you have to understand that. That 14,000 is saying Chevron is now at $0. Now, how likely is that? Maybe not very likely, but that's what it's saying, okay? If it did. The key word is if. There's the premium, there's the commission, and what we're going to go ahead and do is send the order. So a lot of times what sometimes investors will do is they'll find stocks that are trending and they'll apply, maybe they'll get in the stock maybe 1, 2, 3 times or so and kind of build a position through a stock. But they also might say, look, I'm going to kind of do an option type strategy that really is maybe a right or an obligation and try to play the direction of the trend maybe from a time decay strategy. We know that a short put is a bullish strategy, and it is also trying to capture time decay and volatility contraction. And if you take a look at this, what you're now going to notice is it's sold at the trade price was at 240, and now the current price is a little bit higher. And so we have now a stock position and an option position. Okay. Now, by the way, in the chat, we do have a survey. That survey is just 2 questions about how you enjoyed today's session. Click on that so it pulls up on your page, and that way you could save it at the end as well. You can look at it at the end as well. Okay, you don't need to fill it out right now, but that way you just know that there was a survey. And a lot of you asked, hey, could you tell me when there's a survey, etc. Now, those comments that if you fill out, you say you have personalized comments, I read those comments. We get those each day. We read those. Thank you in advance. Now, are there any questions? Okay. Now, the comment, let me just go back to one thing that was asked about the moving averages. Okay. So let me share this just real quick. And what I'm going to do is I'm going to share the moving averages, and I think some of you beat me to that. But this is the moving average chart that you're seeing. So simply we can go to the setup at the top right, open shared item, not too bad. And if I do open shared item, copy and paste back in. That is not too bad, right? Whole thing is go to setup, open shared item, copy and paste in. And I'll put it in the chat again so you can see that, okay? So you don't have to recreate that. That's just like a chart that I like to use in our examples. Now, what I want to also do is last week we showed an example of options. Now, how many of you ever thought to yourself, well, James, I'd like to kind of maybe practice options. And last week we did the example of ConocoPhillips. We actually said, look, let's kind of show a side-by-side example. What happens if you would have bought the $90 call? What happens if you would have bought the $92.50 call? And what you're now going to notice is the strike, the 90, that is more in the money, that was more money to buy initially, it has a higher dollar gain so far. Why is that? Well, I had a higher delta, okay? So a higher delta, if the stock actually goes up in your intended direction, the gain should be bigger. Now, if we kind of said, okay, well, percentage-wise, okay? If you take a look and say which one made more percentage, slightly more was the 90, but not too far behind was if we said, look, we're going to buy the 92.5. You bought that call for $4.95 and it's at $5.52. It's up about 11.62%. So the dollar amounts are different. Now, the joke is, now don't laugh when I say this, but the dollar amount is what you tell your spouse. The percentages are what you tell your friends. Okay, now I just want to kind of show that we're still watching that. And if we actually said, hey, ConocoPhillips, what type of trend do we actually have there? If we pull that up, ConocoPhillips, if you take a look at this, it's still holding above that breakout point. It's kind of more like in the flag, okay, where it's run up in the price and it's had 2 days down. Now, some investors, they might say, well, and we talked about this yesterday, those red candles, as long as they stay above that 20-period moving average, which is right there, the trend is still intact, okay? So we're going to continue to hold that, thinking potentially, could that go to the upside and try to make a higher low? Now, do you have any questions? Now, after I see if there's any questions, I'd like to take a look at some lower priced energy stocks. Sometimes when we pull up examples, people might say comments like, well, yeah, it's high price, it's high price, it's high price. I don't know where everyone is, okay? If we look at ConocoPhillips, it was a $400 or $500, $600 investment to do the call. It's a $97 stock-ish. I don't know if that's high for most. I don't know. Different investors, okay? Now, what I want to do is I want to kind of just, and I'm going to watch for other questions, but I think I got those. I'm going to go to a couple stocks that kind of stood out a little bit here today, and I'm going to kind of look for some stocks that might be a little bit lower priced. Now, we know that if you took a stock like Halliburton, okay, it's $23. And what you're now going to notice on Halliburton is we had prior highs right in there, okay? We had another high, if we count the intraday high, right there. So there was kind of some resistance right about, let's say, 22-ish, somewhere in that area. We saw the price. Now notice on that breakout, we keep saying every time, mostly, the breakout, green candle, we got that. I labeled it as number one. Notice on day two, red candle. Is that normal or unnormal? Well, it's kind of pretty normal, okay? That second day on the breakout tends to be the red candle. Now, what I hope you get from my teaching is red candles are not bad if the price can stay above the 20-period moving average. Question now becomes, did the red candle stay above the 20-period moving average? That's the 20-day moving average. And the answer is it did. So the red candle is just saying, hey, we closed lower than where we opened. Big deal. Big deal. When people see those red candles, they get like fearful. you got to remember something. Our breathing is inhale, exhale. Same thing with stocks. Higher highs, higher lows. The higher low is a part of the uptrend. We need the higher lows so we can create support. Okay? Without the higher lows, you don't have any support. We need the pullbacks, red candles, to create the higher lows and create a support level. Now, what I'm going to do in this example on Halliburton, if someone said, hey, James, now, if I were to ask you a question, calling all technicians, if Halliburton went to the upside, what might be some areas of resistance? What would you say? Well, if we kind of look at this and said, well, where do I think it might try to go to? Okay, maybe. I'm just going to kind of write some lines. Tell me kind of what your thoughts are. If we looked at this, we might kind of say, maybe, James, these might be some areas. Okay, 24, 25, 26-ish, maybe 27 and change. Okay, kind of looks about like every dollar or so. Now, when you're first getting started, okay, it's fair to say that you're probably not trading the bigger dollar stocks of the world. Doesn't mean you can't, but you might just be trading lower dollar stocks. You might feel more comfortable, and you might say, I would just want to practice, okay? Now, what I'm going to do is I'm going to right-click on the price graph. Now, if I right-click on the price graph, we get a menu. And what we're going to do is we're going to go down to where it says Buy Custom and with OCO Bracket. Now, the question we've got to ask ourselves is this a stock trade or is this an option trade? Well, if you just right-click on the chart and you do this, it's a stock trade. Now, what I'm going to do in this case is I'm going to right-click on that, Buy Custom with OCO Bracket, and we now get 3 rows. The first row in green, that's the buy order. The second row is the target, and the third row is the stop. Now, if I were to ask you a question, now Isaiah says 25.26, Kevin says 25.26. Now, what I'm going to do is I'm going to kind of take somewhere in the middle, 25.50. A lot of you said 25.26. What I'm going to do is put 25.50. Now, someone might look at this and say, well, yeah, you know, I want to sell it at 40 bucks, but you got to understand something. Stocks don't necessarily just go from 23 to 40 bucks all the time. They tend to move in percentages, okay? If the stock went from 23 and a half, 23 and change to 25, that's like an 8% move, okay? Now, do we know that it's going to go to 25 and a half? We don't know that, okay? But if it did, that'd be like 8% above where maybe it was purchased. The stop underneath, what I'm going to do is I'm going to set the stop right underneath the moving average line. Now, ladies and gentlemen, boys and girls, what some investors do is they say, James, I'm trying to get in when there's that green shading, and I'm trying to stay in the position when there is the green shading. And when I see a red candle, that does not mean I'm going to get out. I'm going to try to stay in when there's the green shading. Now, how many of you ever looked back and said, why do I make this so hard? It's a good question, okay? Now, I'll just ask you since we went there, why do we make this so hard? It's because we play mental mind games, right? We read the news, okay? People talk about how bad it is, whatever. And the technician's job is not to like look at news per se. They're reading the charts, okay? Now, it's been green for a while, okay? This ain't the first day. And now what I'm going to do is I'm going to take the 22 and a half, which is we're at 22.40.54, and I'm going to set the stop less 3%. So if I take 0.97, it's just going to be 3% below the moving average. 22.54 times 0.97. And if I did that again, because I kind of fat fingered it, and now what you're going to see is the stop is going to be 21.86. And I'm going to put that right there. Okay, so here we go. To finish this order off, 21.86, I'm going to put that right there. Now, obviously, if you're in this, we'll go to GTC, good till canceled, good till canceled. Now, what you're now going to notice is we have a target, and then we have a stop underneath. Now, if we take a look at this, what does the investor really want to see? They want to see crude oil hold at the price level, number one, or go higher, okay? And the companies that are selling that product, they financially could potentially benefit from that potentially higher price. It could boost their revenues, and their potential earnings per share, potentially. Now, what I'm going to go ahead and do is go confirm. And now what you're going to notice when we talk about a stop is not saying exactly where it's going to sell. It's a trigger to sell. Okay. So that's the risk of a stop order. And what we're going to go ahead and do is we'll send that order. Okay. Now, what I'm going to do, now the comment from Josh is, why not use GTC plus the extended hours? Okay. So where can we see that? So if we said GTC, the EXT, it's saying in the pre-market, in the post-market, I don't care when it is. If you can sell it at 25.50 or higher, sell. Okay. Now, I mean, could some investors do that? Sure. Do all investors know what extended hours trades are? No. The starting point would be GTC, but if you said, look, I have experience, I tend to buy some of these commodity stocks in the pre-market or the post-market hours, they could put the GTC extended. The fact that we're putting limit is trying to protect the investor, that they're at least getting 25.50 or higher. The more risky part of this would be if you said, hey, on that stop, I'm going to put a GTC extended hour trade, because you got to remember, in the after hours or pre-market hours, the bid-ask spreads tend to be wider, okay? And sometimes if you put a GTC EXT order, you know, you could get caught on that wider bid-ask spread, showing that the market might be less liquid and kind of get filled just in a more illiquid market. So now, JP, you're probably thinking this. You're probably thinking on the target, why not just push into that just in case? Okay, fair. Okay, but I think that's the risk of doing the GTC EXT order, is if that spread starts to widen out, the bid-ask spread starts to widen out, could it go down and nick your stop loss? Okay, just be aware of that. Now, I also want to kind of take a look at some other stocks, lower price dollar stocks, okay? Now, Oxy is probably, I'm going to show this one, we'll do a faster example on this. Oxy, we had one touch, pretty close to two touch, three touch, give me a four, and now what you're going to see is old resistance, or excuse me, support, was a resistance, and now all of a sudden we've actually scooped back and we've come back to the upside. Now let me kind of zoom in here. Now if I zoom in here, what you're now going to notice is when we got above the 44 price level, we've had three red candles. Has the three red candles led to a breach of the price going down below the 20 period moving average? Just say no. Well, if we take a look at this, if we're able to really make, let's say, a higher low. Now, if you zoom in and say, James, let me see that. I want to see it for myself. Now, why do you keep saying the 20 period moving average? Because sometimes it can act like a support. Just in the last 2 days, we've seen it come down to within a whisker of the 20 period moving average, bounce back up. Came down to the 20 period moving average, bounce back up. Now, what does that kind of show? Well, we know that there are some technicians where they put those buy limit orders and they set them near or on the moving averages. I know what you're thinking. Can I do that? You're your own person. Yeah. If you're seeing that over and over and over and over, well, there's probably other investors that see the same thing and they're trying to benefit from that potential support bounce and the trend going to the upside. Now, when we take a look at this kind of trade, let's kind of show an option trade, okay? Now, I'm targeting lower price dollar stocks because if you say, hey, James, I'm more beginner, I may be more intermediate, I'm trying to learn about trend, I want to practice stock trading, but maybe an option trade. How might I, for example, practice a bullish trade, but kind of also something that might have some probability as well? So in this example, I want to go back to just real quick Oxy. And what we're now going to see is on Oxy, okay, we see that there's Oxy, stock price. We're going to go down to the option. On our examples, we tend to look at options that expire 20 to 50 days to expiration. Now, if you look at the stock price, $45, if we said, look, where are we trying to buy the stock? Well, let's try to buy the stock potentially at a lower price level. If I chose the $45 level, okay, if we agreed to buy those shares from now until expiration, they're going to give us $1.35. Now, the number right there of that column delta, that's just showing if the stock went up $1, the option would reduce approximately in value by 40 cents. The stock went down $1, the option goes up by 40 cents. We know that the delta, that number is dynamic, it's not stationary, and what you're now going to notice is that's also stating what's the probability that the stock could be below the 45 strike by a penny. And they're telling us right now, probability-wise, 40% chance the stock could be below. Now, as an investor, you tend to want to actually have probability on your side and the math on your side. Now, what we're going to do this trade is we're going to click on if we want to sell the option. See, if we buy the option, buy a put, that's a bearish trade. If you actually sell the put, that is a bullish trade, okay? We're going to click on that. Now, if I click on that $1.37, and if we say, look, could I try to get something a little bit more in the middle? Let's say we actually did 138, okay? Now, if we did 138, we're selling 1. Now, do you have to do 1? No, you can do 2, you can do 3, you can do 4, right? Everyone might have a different position size. In our example, we're just going to practice 1, okay? We're going to sell 1, the 45 put. What does that mean? It means the investor is willing to be the buyer at the strike price from now to expiration. If we had to buy the shares, okay, it'd be about $4,500 worth of stock, okay? If we then buy those shares, do we have to hold on to them for any length of time? No, the investor could sell all of them or sell some of them. It's up to them. They're their shares now. Now, for that risk, okay, the investor says, look, I want some premium for the potential obligation. And now what you're going to notice is if we agree to buy those shares at 45, we collect $1.38, you're now going to see that we have what we call a break-even price. That break-even price is at the expiration, which is the July 18th. So what the investor wants the stock to do is to go up, worst case go sideways, and just burn time and last have the volatility go down, okay? Now, what I'm going to do here is if we kind of said, hey, let's kind of wrap this up. So this is our second trade example, okay? We tried to focus on lower price dollar stocks, oil-based, that kind of might be swinging back to the upside. We talked about Halliburton. Second trade, we actually talked about Oxy. But there's other ones like Devon. Keep an eye on that. Very similar to Oxy. And also Schlumberger. That is also kind of a channel trade breakout setup. That's another one that kind of has like a U pattern to it. Okay. And if we kind of said, well, what might be some higher price dollar stocks? PSX. And we already talked about ConocoPhillips. So we're kind of throwing out there, could oil continue to rally based upon what we're seeing abroad? Keep an eye on that. Now, what I want to do is kind of closing here is remind you, this session is not just a one-off. Remember, you can go right to YouTube. Okay, and if you go straight to YouTube, type in Trader Talks, Schwab Coaching Webcast, what you're now going to notice is you're going to see that right there. When you go to Trader Talks, Schwab Coaching Webcast, it's going to get you this page. You can subscribe right on that page, okay, for free. And then right below that, you're going to see post. This is important because as a client, we want you to look and see what topics interest you. And let me go ahead and actually put this right there, okay? Now, if you say, well, James, I would like to learn about, let's say, how do I learn more about Thinkorswim? Or I would like to really learn about maybe, let's say, how do I trade the trend? Or how do I, for example, learn more about charting, okay? Or I just kind of sometimes need help to kind of see how the market is faring on the day that I'm looking to invest, etc. Kevin also does almost a daily class, teaching 4 out of 5 days, where he kind of talks about what's happening in the marketplace. You can also go to schwab.com, okay, and last piece here, just to know kind of some of the tools that you have. If you go to schwab.com, you go to learn, and then you go right to where it says Schwab Coaching. And what you're now going to notice is, so schwab.com, go to learn, and then Schwab coaching. Get you this page. And what you're going to now notice is it will say live webcast. And that live webcast will also show you how do you access, and I'll put that in the chat as well, right there. Okay. And what that's going to show is the calendar, and you can click on them and it goes right to the class. That's another way to join us as well. So I want to thank you so much for your comments and your participation. Want to give us a quick reminder that our focus was on kind of lower price energy stocks. Could they break out to the upside? I did the lower price here today because many investors might be newer to intermediate learning level. And so I want to kind of make sure that we kind of, everyone gets fed on different things to learn and at their level. Now remember, there's a survey in the chat. Thank you in advance for filling that out. Remember, with what we discussed, it was done for example and illustrative purposes only. And also remember that the next class coming up, Barbara Armstrong will teach that with getting started with options, and she'll be teaching that right at the top of the hour. So join her. And this has been the class on Investing Master Series. Have a great day. Take care. Bye-bye.